Kia ora, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock. With news, we're in that transition zone where gains and losses are offsetting each other. First, American durable goods orders retreated in January from December. A fall was expected mainly because there was an outside rise the prior month, but it was more than anticipated. However, the retreat was mainly due to a drop in orders for commercial aircraft. Excluding that, there was a rise. And on the same basis, capital goods orders rose as well, suggesting boardrooms are still in invest mode. It is likely that February orders will jump based on some very large recent aircraft orders. Year on year, durable goods orders are up 3%, and non-aircraft capital goods orders are up 5.3%. In the US oil patch, the Dallas Fed's factory survey is weak in February. We've noted it's declining for some time, but now it's lower than year-ago levels for the first time since May 2020. The 9-month run of declining new orders has caught up with them. But nationally, and what their sector suspects is a turning point, the number of pending home sales in January rose more than expected from December, and by quite a bit more. A 1% rise was anticipated, but the actual rise was 8.1%. This surprise gain comes on top of the stronger new home sales we noted last week. And Hong Kong reported a huge retreat in merchandise trade activity for January. Exports fell 37% from year-ago levels, while imports retreated 30%. These were worse levels than for December. The export drop was their largest in 70 years. It's sad to watch the life being squeezed out of what has been a globally important city. In the UK, they seem to have tidied up their deal with the EU on trade with Northern Ireland, a revised side deal called the Windsor Framework. Both sides claim victory, which is usual in these sorts of negotiations. The US Treasury 10-year yield starts today at 3.92% and down 3 basis points. We should also note that the New Zealand's 2-year swap rate hit its highest level yesterday since November 2008. And the price of gold will open today at $1,817 an ounce. That's up $6 since yesterday. But oil prices start today soft at just under $76 a barrel in the US, while the international Brent price is just over $82 a barrel. And the Kiwi dollar is still at 61.6 US cents and unchanged since yesterday, even if it is still close to a 3-month low. Against the Aussie dollar, we're a little changed at 91.6 Australian cents, and against the euro, we're soft at 58.2 euro cents. That all means our trade weighted index starts today at 70 and down 20 basis points. Get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.